Good morning, Joe, here on the Rise News. I am Adesola Omoruan.
I'm Rafal Yoseni.
And I am Shaiton Atigari. Good morning.
Well, it is no longer news that the Nigerian government has approved an increase in value-added tax VAT rate from 5% to 7.2%.
However, this is subject to an amendment of the VAT Act of 1994 by the National Assembly. And if approved by the federal government, lawmakers, the new rate will take effect in 2020.
It will be recalled that in 2007, former President Olusegun Obasanjo increased VAT to 10% on the eve of his departure from office, but it was reversed by his successor, Umaru Musa Yar'Adua, following opposition from Labour.
Well, joining us now to discuss the proposed VAT increase and other tax-related issues is Seye Arowolo, a tax partner at Deloitte Nigeria. Many thanks for joining us.
Thank you for having me back.
Great to have you.
Yes, please.
Well, let's dive right into it. This is interesting. It's a bit of sour and sweet situation, isn't it? While the consumers bear the brunt, it will also be an opportunity to increase revenue generation for the government. What's your take on this?
Okay, let me start by saying this, that it is quite important that at this stage in our experience economically, that we appreciate or do not underappreciate the implications or the threats, because the issues here are not that simple. There are links and there are myriads of other associated concerns. I would like to say that the condition right now, in terms of our experience, our revenue, those who are informed about how the government financing operates realize that there is a massive revenue shortage that we are experiencing. And there are three questions that people need to ask. What are the options that are available to government? How should each of these options be implemented, and when? So when the idea of a VAT rate adjustment was mooted in 2016, we asked ourselves 4 questions, when that issue cropped up. And when that idea was mooted, there was a condition, or there are 2 conditions that were attached to it. Say, look, Nigeria needs to step up its resolve around revenue mobilization, subject to 2 conditions: that you broaden the tax net and you improve your collection efficiency. So whether you do rate adjustment or you decide to proceed to creating new tax types, if the administrative system or process that is going to drive the collection of those taxes are still having some inefficiencies, there is a risk that this same revenue that you are targeting will be leaked away. But it is important that citizens realize that we do not get to where we are overnight. So it is the issue of VAT rate adjustment is not just about fiscal, it's not just purely economic, it also has some governance dimensions. And there is credit that must be given to this government, whilst we recognize there is a social cost to such VAT rate adjustment.
Okay, let me take you up on that. A lot of people will say, yes, credit to be given to the government in the sense that when you check the pervading rates all over Africa, Congo, 19%, Algeria, about 21%, Sub-Saharan Africa, the average is 15%. So we've kept this, since the 1993-94 regime when this VAT Act was instituted.
In fact, 25 years ago.
25 years ago.
Yes.
So credit to be given. Okay, we've kept that. But a lot of people will say, why should I trust that if I pay more taxes, it is not going to seep away through corruption? And I'll give you an instance. You read the book, Reforming the Unreformable by Ngozi Okonjo-Iweala. You saw how corruption was being perpetrated. You hear about scandals like P&ID. So why should I pay more? And that's what the civil society is saying. In fact, experts have come out to say that this is going to put Nigerians in dire states. The political office holders are going to town as regards. And you say we should commend the government on this?
So, the perspective I need you to have, based on where I see it, is basically that the VAT rate adjustment is just one element of a suite of proposals that this government is entertaining around, amending the tax legislation. There was an initiative that was started during the era of the former minister, whereby we adopted a tax policy, whereby a tax policy implementation committee was set up to try and create that nexus between the tax policy and the existing tax legislation. That particular committee went to work, came up with a lot of proposals for amendments across all the tax legislation, which are meant to enhance ease of doing business, enhance raising revenue for government, and deleting some kinds of obsolete provisions in those legislation. Now, at this time, the same government reconstituted that policy because it's a very good idea to try and bring some form of coherence and structure to the way interventions are being made in the fiscal space. So when you talk about the idea of leakages of revenue, I mentioned before we came on here that there's an area that the Nigerian government or the federal government needs to invest more in. It is in this area of correcting the trust deficit, in which case the body language must be consistent with those positive, laudable, structured ideas that the government is trying to drive within the economy. Like I said before, we did not arrive in this economic morals that we find ourselves overnight. It's an accumulation of failure of governance. But we should also commend a government that is trying to interrogate those issues. Now, you've made some give some comparative examples around, okay, when you look at West Africa and some other African countries that are double GDP VAT rate, it's actually misleading. Now, okay, thank you so much. If you talk about Nigeria having a flat rate of 5%, don't also forget that our input and output VAT recovery system or mechanism or provision is also restricted. So by the time you actually look at that from a broader perspective, you see a situation that the so-called 5% is actually higher than 5% if you do the analysis.
So the so-called 5%, now what does it translate to? So if you do the analysis.
So essentially, it could actually be in the range of more than 10% for certain businesses. So the question is trying to situate the conversation of this VAT rate adjustment within the broad framework of other suite of proposals that are meant to drive ease of doing business, drive raising additional revenue for government.
Okay, so still on the issue of compliance. Now, yes, you've said that definitely we still have a lot of people. According to the FIR's chairman, we have 254 billion that is still being owed in tax. Doesn't it make sense to address the issue of structure first and make sure that we can actually, like you said, expand the market as opposed to focusing on the increase of the tax rate? Because what you're almost telling Nigerians is, we have people that are paying tax and we've collected your tax from you. However, to be able to increase the revenue generation, we're going to increase the tax you collect and not go after those people who are already defaulting in their tax. How about addressing those issues first?
I appreciate the perspective you brought, that there were those that have paid. Do you realize also that listening to us now are those who are sitting on legitimately collected taxes due to government that should have been remitted, that have not been remitted. And they are part of the people making argument around VAT rate adjustment. So my plea to them, because if you look at that section 24F of the Constitution, it shall be a duty of every citizen to declare his to declare his income honestly to the appropriate agencies and pay the tax due. So where you are designated as a collection agent, and you have collected VAT, for instance, because VAT is at the heart of our conversation right now. You have collected this VAT, for instance, and you should have remitted, but you have not remitted it. It takes a greater effort by the tax authorities to begin to pursue you. Time is wasted. It increases the cost of administration. When you know what you ought to do and you have failed to do it. So that aspect is also a very important factor. I agree with what you have said, but we also need to balance, because right as at 2018, we all recognize that the total revenue collected by reason of the commitment and the hard work of the FRS was close to 5.3. It's a record in this environment. Of course, by the time you engage in comparative examples between Nigeria and that kind of, and South Africa, for instance, you will say, look, it's a peanut.
It's interesting how you pose questions in responding to my first question to you, and I would like to add some more. For instance, why is the Nigerian government doing this now? Is it because it is long overdue, or is it because we're trying to be at par with other countries in the sub-Saharan, or we are just at dash race with the economy and we need more money?
Look, the last one is a primary and an immediate trigger. We are not going to go into taking fiscal decisions just because of what other countries are doing. But right now, we know that there is significant revenue shortage. And like I wanted to say, it has nothing to do with IMF prescription. It has nothing to do with World Bank prescription. If there are areas of untapped revenue potential, it behoves the government. In fact, it is very interesting that we have found a government that is interrogating those areas. It is very interesting that we are interrogating those areas right now, and we see it as a sign of better things to come. Look, the time had gone for you to make interventions that are not structured, that are not coherent, that are haphazard in trying to rescue Nigeria's revenue challenge.
Feasible, sorry, Rufai, how feasible is this? Because, again, it's been long coming. Just a couple of months ago, earlier this year, we saw the back and forth, allegations and denial, even by the FIRS boss, who said he was quoted out of context. We saw the national, about VAT increase. We saw the national chairman of the All Progressives Congress, who was advising the president to shun the idea of increasing VAT.
So like I said to you,
so how feasible is this? Is this
before I talk about feasibility,
yes.
before I talk about feasibility, I need to also say that, look, you cannot have change without a cost. There is a cost to doing the right things, because it's like changing the whole landscape. And what we have tried to do, or what the government is also trying to do from where I sit, is not to implement so sudden a change in the old framework that citizens are used to, that businessmen are used to, that business market actors are used to in this area of tax. And that is why there are certain proposals that are immediate, and there are certain proposals that are deferred, because there is a need to actually robustly look into their implications in terms of impact on Nigerians and so many other players within the market. Okay. So when you talk about feasibility, there can only, look, one thing that is important, which I think cuts across most countries of the world, is to signal a change in direction. Okay. If you remember, since 2007, there is the leaning towards moving from direct taxation to indirect taxation as a means of capturing more people into the tax net. So if we are leaning towards that, then, of course, our VAT rate that had stayed at one spot for more than 25 years, there will be some level of incremental adjustment. And the question we have asked, sir, is that what should be the nature of that adjustment? Should it be flat or multiple rates? Okay. Should we focus on the addition?
Quick commercial break. We'll come back and we'll talk more about this when I come back. I mean, I've got some areas to look at this and take you on. The Arise News Channel right here and The Morning Show. We'll be right back. All right, so The Morning Show here on the Rise News Channel. We're still talking to Seye Arowolo, tax partner at Deloitte. We've been asking a lot of questions about VAT, but I mean, there's a technical angle I want to bring to this. Reversals. You know, your VAT reversals, that's a very important angle. And then you said something. I mean, your rebates you get, you know, paying VATs and the likes. You know, you talked about the fact that, for the fact that it's flat 5%, and for the fact that we don't have adequate infrastructure in place for that, it goes to over 10%, isn't it?
I said because of the limits.
Because of the limits, yeah. So let's have a let's have a conversation about that.
Go on.
Since those structures have not been put in place now, and with 7.2, wouldn't the limit skyrocket, or is it part of the gamut? Because I mean, I have read the documents, the VAT Acts of 1993, and I see that it's not all inclusive. I mean, in fact, when you even look at the parts where they talk about exemptions, it was only recently that rents was put as an exemption in that gamut. So let's talk about the technicality of this.
So one thing I need you to really appreciate at this time is that one of the elements of the current proposals that are in consultation and in discussion, as alluded to by the minister, is how to expand that scope of claim of input VAT, output VAT.
Okay, explain the gamut of the scope of claim to a layman, a lay businessman.
So right now, I mean, the two conditions that we have actually only speak to manufacturing sector, whereby if you buy something and you resell it in Nigeria, for instance, you are enabled to actually claim your input VAT out of your output VAT, which reduces whatever you need to remit to government. Or whereby you buy something that forms part of the production process, you know, in Nigeria. So those are two. So which means that the whole service sector, for instance, is not even recognized or reflected. Now, the question is, if you look at the fact that service sector is about 56% of your GDP as we speak, don't you think that we need to review and revisit that particular restriction that currently exists in the VAT Act, so that maybe they could also be allowed to make such recoveries under the VAT provisions? And these are some of the proposals that are going to come along with, I mean, if approved, obviously, by the Federal Executive Council. How are you sure
those proposals are going to come? Are they in there? Because all we hear is just 7.5%. Are they in there?
Because that is what people are going to know. And that's why the media also has a responsibility to assist government in disseminating the right information. There's nobody that will hear there's an increase in what he used to pay that will not be emotional about it. But again, we need to look at this conversation not in isolation, not without reference to other proposals that are meant to address certain concerns that the citizen or the market actors are going to be having around a potential increase in the VAT rate.
You know, we are very, quick to compare our current VAT rates to that in other countries where we say, we are actually at the lowest right now at 5%. However, even during the break, we were talking about looking at it holistically, that we still have gaps in our infrastructure, in our education, and in all of these things. Now, we have been able to put together this amount of money in the 2018 fiscal year, and the Nigerian citizens have not seen the changes that should have been seen based on the collection of these monies. So it's ridiculous in a way to come back and say that we want to increase it. How about we see the difference being made first? How about we cut costs in governance? Why take it out from people that are already paying their taxes?
So there are, when I said it wasn't a simple issue, that it's also linked to governance. And we know that one of the primary objectives of government is to protect and ensure proper well-being of the citizen. And by the time you look at well-being, it's something that is so broad. Now, I said something about trust deficit, whereby you look at the body language of government, and it's contrary to some of the things that have been said. Flip it this way. How will it sound if, as we make comparative analysis with different countries in terms of their VAT rates of fiscal positioning, and we also look at the Human Development Index, in which case, the same way we had interrogated the parameters around ease of doing business, the government also looks into setting up a council to look into our Human Development Indices issue, in which case Nigeria is currently ranked 157 out of 189 countries. Now, per capita income, what is our per capita income? What is our standard of living? What is the cost of living conditions in Nigeria? And everything associated to human development. Now, if we are interrogating those parameters, there is a tendency that the average citizen in the country and the taxable persons and taxpayers could begin to believe more that the approach to comparing Nigeria with other countries on fiscal matters are not just self-serving, that there is actually a connection and intendment to make sure that whatever we gain through fiscal improvements are going to be plowed into the same matters around human development index.
What are the likely domino effects we are likely to see? I mean, the minister is looking at 2020 because the VAT Act has to be repealed. And I'm looking specifically at small businesses, especially when you also consider compliance and efficiency, lack of that in taxation regime in Nigeria. So
based on what I'm aware of, as part of the suite of proposals to look into all of these things holistically, the medium-scale businesses, there will be a kind of registration threshold, which we have been canvassing for more than 15 years around how we approach VAT administration, in Nigeria. So that is one area. And there are also going to be some form of corresponding direct tax rates adjustments. For instance, for SMEs, also in the proposals are reduced tax rates. So that, look, at the end of the day, you are trying to cushion the impact of a VAT rate adjustment around, activities that concern the common man within the country. So that is, and do you know what? I also know, really, that all kinds of data analytics are going on to give this particular proposal some kind of practicality in its impact and implications, both on the economy and the citizens that are playing within the market.
Okay. I want to think out of the box now, and let's look at this approach. A lot of people will say, why don't we toll the approach of a country like Ireland, whose economy was almost nothing, but single-handedly brought about an approach, make themselves a tax haven, you can negotiate taxes, low VATs, and in turn, companies like Google came into Ireland and they have like 30% GDP growth by the factor of companies coming in. Some will say we're disadvantaged already, no infrastructure, nothing to incentivize investors, seemingly looking like that, but great potential, great potential, but it's not been turned into kinetic yet. But why can't we, have an economy where we can make like a tax haven and get the much needed investment in the economy and balance it that way?
No, thank you for raising the, and that's why I said, look, it's not as simple as you think. Now, there is a level of tax competitiveness that what you have said has mentioned, and it's a zero-sum game. Because the same way you are looking to woo investment through taxes, the reduction in taxes, tax reliefs, tax breaks, other countries are also looking into doing so. Now, there is also a reputational issue around low tax jurisdictions. You know the activities of the Financial Action Task Force in those areas. In fact, I'm aware of a transaction that the reality is that some locations were disapproved by reason of the fact that they have the tag low tax jurisdiction. So there are also governance issues from a corporate point of view on those kinds of choices.
But everybody seems to be going that way.
But Nigeria has, in fact, I think we have so much or too much of fiscal reliefs thrown at investors. If you can articulate a package of incentives that you want to secure from government if you are going to make significant investment in a certain area of the economy. But the reality is that we have also shouted as to what are the cost benefits approaches around.
Do we have your colleague was sitting on this same chair last week, and he said he can count over 52 taxes that businesses will pay. Over 52 taxes and levies that businesses will pay. And you're saying we have a gamut of things to try to
because you need to appreciate that. Now, Nigeria is a federation. And I think I've made an argument on this show before that. Look, there are some particular issues that are structural, but they can be ameliorated depending on how we go about the tax administration system. But definitely you need to know that the Constitution recognizes, and your taxing powers follow the tiers of government that are recognized within the Constitution.
I know this all boils down to revenue generation for the government, especially as it has failed to meet its revenue targets in recent times and funding of the budget. But let me get your take on an argument that's ongoing. I mean, the president had just recently said he does not want to, put more sufferings on Nigerians. And one would wonder, isn't it not time to take that tough economic decision, especially when it comes to removal of subsidy? Would that not be a better option than the increase in VAT at this time?
It's the cost of governance argument is not even limited to subsidy. I've read all kinds of arguments around what some public servants and take home and all of those stuff. But I think this government has also done something. Every year, you see a progressive adjustment to the rates or the ratio between the recurrent expenditure and the capital expenditure. And one thing that I think the media will equally assist the government to do in this agenda setting is how to prompt aggressive reduction in the recurrent expenditure vis-a-vis the capital expenditure. And don't forget also that by the time you create the so-called infrastructures in which we are deficient, it also comes with a recurrent cost. So there's a need to balance all these arguments from a wider perspective.
Just hold on to that line of thought. We'll be right back after this break on the Morning Show here on the Rise News. Join us again. Welcome back to the Morning Show here on the Rise News, and we're still talking to tax partner at Deloitte Nigeria, Seye Arowolo. Thank you so much for staying with us. Before the break, we were talking about balancing the issue of governance, issue of trust, with issue of taxation, revenue generation in Nigeria. Do you want to land on that thought?
So, the point I was just trying to make is that the media also has a significant role to play in assisting government's drive. Because we are all citizens of the country, we want a Nigeria that works. I mean, the aspirations are clear, but how to get there, we might not have consensus. But the reality is that we need to set those agendas. Right now, we are all complaining about, cost of governance, what do we do, how do we get out of it, how do we make sure that government has sufficient money of revenue to implement certain infrastructure deficit. Look, the reality is this. We've got to start doing the right things consistently and coherently. I'm excited when I see someone, regardless of the pace of progress, that you have started your journey of 1,000 miles with a step. Our approach has to be coherent. It cannot be haphazard. And I can tell you, as we take coherent, structured steps, even the aspect of cost of governance in terms of this subsidy issue, wage bill of public servants and all of those, will find themselves resolved incrementally somehow. Because the reality is that we need citizens, and I'm happy with the way things, let me correct myself. I'm happy with the level of consciousness, the level of, the reduction in the degree of apathy that citizens, educated, literate people are having right now, because everybody is interested in what goes on. And by the time everybody is interested in what goes on and looking at the implications for themselves, for their business, for their families, there is a tendency to begin to exert that pressure for good governance that has been lacking in so many years past.
Well, you of all people know that nobody likes to pay tax, but we have to pay anyways.
Exactly.
We have to pay. And so let me ask you, with all of this that is on ground and what you've seen, the new national minimum wage partially in limbo, where do you see this brick? Do you see a brick wall in the implementation of this, and where do you see that coming from?
You see, for me, maybe because I'm a structured person and I'm a process-driven person, there's a question we have asked before in an article that we wrote in our Inside Tax to say, look, what exactly is the quality of existence that the government, whether federal government, state government, or local government, envisages for the average Nigerian? For instance, is it that if I graduate today, the system that we have in the country, is it that within 5 years, I will have a decent shelter, I will have a decent car. I can actually set up my family. Do we have a system that reinforces those kinds of expectations? Let me give you an instance. How can someone work for 35 years and he probably cannot afford a house of his own based on whatever wage you are paying? So these are critical policy-related questions. So I said to myself that the labor, I mean, the Nigerian Labour Congress, they need to revisit the strategy around engaging government when it's not about minimum wage.
So do you say
it's about there? No, I'm coming. It's not about minimum wage. It's about what you are being paid, what can it afford you within the economy, within the market you are operating. So somebody gave a linear comparison that in 2015 it was 18,000, and in 2019 the proposal or the approved was 30,000. But that when you really look at it based on the exchange rate and all of those things, it appears it's just the same in effect. Even though absolutely in figures, it appeared to have increased, but in the net impact of it, it's just, you have not moved at all.
Yes,
and the inflation rate in 2015 is not the same as what you have in 2019.
Like
so I'm not saying that it has hit a brick wall. I'm only saying that we need to look at it.
No, I'm not even talking about the national minimum wage. Okay. I'm talking about the implementation of the VAT increase.
Yes.
When it does come into effect in 2020, that the finance minister is proposing.
Yeah, it's not going to. I wonder, I need to appreciate.
Do you foresee a brick wall from Labour, for
instance? Because between now and when all the other proposals would have gone in, I expect that there will be a level of engagement to put. I mean, you can imagine once the announcement was made, I think the National Assembly was inviting the minister to come and, to come and clarify what the intent was and all of those, which also shows that there's a level of stakeholder engagement that I envisage is really going to happen between now and the end of the year, so that in 2020, when this is meant to take effect, people can have an holistic view of all the other proposals that are being contemplated to make this something to swallow.
Okay. I just wanted to, put the conversation out there about the digital economy and charging of VAT and taxation of the digital economy. I mean, because since the last time we have the VAT laws, 1993, there was no digital economy. In fact, it was not 1999 yet. We had not had the dot-com boom and the likes. Recently, you heard what happened. It was, some will say it's an allegation, but the Lagos State government refuted it, about some charges for ride-hailing companies and the likes and things like that. I mean, is that something they should consider in the bill?
So now, in terms of
the
digital economy,
or the gig economy, and people too that work in this gig economy.
So, I said something about suits of proposals.
Yeah.
Also envisaged in an amendment that is being contemplated is a provision that allows Nigeria to have a fair share of some of those transactions that happen using the online platform. You are downloading this music videos, iTunes, and all of those things. That look, how will Nigeria recover its own fair share of all these transactions? And it's a very significant step. In fact, there is an argument that rather than just a simplistic amendment being proposed in the VAT Act, we need to follow it through with more detailed, robust legislation as we have in Kenya, for instance, as we have in Ghana, for instance, as we have in South Africa, for instance. I mean, these are countries that are, have close ties, with Nigeria. So where I'm going is that, look, we will not resolve some of our issues around revenue generation with a magic bullet, with a magic wand overnight.
What would be the provisions for taxation of online transactions? I'm saying that because you see those millions. Hang on a minute. Okay. Just hang on a minute. Hang on a minute. Those millions of SMEs you are talking about that they're going to be giving tax rebates, I shock you. Yeah. They do their transactions online, and when you hang on a minute, and when you tax online transactions, and when you go for online transactions, you affect them because a lot of them are picking up their receivables from Paystacks, Flutterwave, and the likes. So I want to know what will be.
There are two levels at which you need to look at those who operate online transactions. Now, there are those who are structured within a corporate vehicle, like a limited liability company. So they have obligations for their direct tax rates. They are still visible somehow. Now, you also have those who have structured themselves as enterprises. And the expectation is that whatever they make from their businesses, they are taxed as individuals. And they need to remit that to the appropriate taxing authority. But the VAT is on transactions. I dare anybody who operates its businesses through an online medium to say he doesn't believe that if it is VATable, the VAT should be collected by the Nigerian authorities. I dare anybody to say that, because it's a VAT is a tax on the transaction. It's not on your income after you have, made all the relevant checks. Exactly. So you need to balance all of these things. You can't be doing this and say you will not be exposed to VAT, or that if the transaction is not exempt, you don't want VAT to impact.
But currently it's not taxed.
Look, you don't know them. There are people who are rendering all kinds of services that are not even registered. And you know what has happened? And that's why I say, look, we need to begin to see coherence. During the voluntary assets and income declaration scheme, there were quite a number of companies that actually deliver their services into Nigeria via online platform that took the opportunity of the VAT scheme to become known, identifiable to the tax authorities, calculated their back taxes, and to enjoy the benefit of the waiver of penalty and interest. And they came forward. So I think the whole idea is that one single solution is not going to help, but by the time you have a suite of options that you are implementing coherently and in a structured manner, making those interventions step by step, I think we are really going to get to where we should have been fiscally as a nation.
Well, where we should have been, but I think one clear question we haven't asked yet is this the right time?
Look, like I told you earlier, if you wake up, the time you wake up is your morning, according to a saying. We have woken up that what we have not been doing before, or what we have not been emphasizing before, we want to emphasize it. Long are the days, or gone are the days when tax should be a child of necessity. Arthur Vanderbilt said that, look, that is the lifeblood of government finance. And no man, no taxpayer or taxable person should be allowed to escape without paying his fair share of contribution into those revenues. He said no taxpayer should be allowed to escape. So which also means that whatever we need to do in empowering our tax collection agencies in terms of assessment, in terms of collection, in terms of enforcing the collection thereof of appropriate taxes that are due, I think we need to do that.
And how much of a difference would this make? I don't know if Deloitte has carried out any research on this. How much of a difference is this going to make for the revenue generation? Because like the minister did stress, only 15% of this will be going to the federal government. The state and the local governments have the other share of 85%. How much of a difference would this make for the state governments in particular? Okay,
so we have not done that analysis ourselves, but we are aware that those analyses are being done. And that is why I say, look, when the minister referenced consultations, it is still part of the approach of a coherent way of trying to look at what are these issues. What is the size of the problem in this area? What is the size of the problem in this area? And making sure that... Now, when you talk about the impact for states, the impact for...
Time is not our friend, and we'll see how